Welcome to another live stream by the Option School. This is your friend Pradeep Singla, and what we are finding, we are having highly volatile markets. So, what kind of option trading strategies we can use in such highly volatile environment? So, option trading strategies cannot be same for all kinds of environment. We said, okay, let us discuss what kind of strategies will be useful in this environment. So, what we are finding, it's a very high VIX environment, and swings are also very high. If you have seen market going up by 300 400 points in a day, and then market coming down by 400 points in a day, in such a scenario, when swings are very high, it's not easy, especially for a option seller, to trade these kind of market. So what kind of option trading strategies we can use? Let us first see two three things. What are the parameters based on which we can choose a particular option strategy? Can those parameters be applied to some of the strategies which can be useful when we have a high VIX environment and high swing in the market? And secondly, what we see, that gap ups and gap downs are really severe. So yesterday also we were discussing with our internal group, and people were seeing SGX Nifty, and they're showing SGX Nifty showing 200 points down. So it's okay that, okay, in case you have a hedge strategy, you are least bothered about that. But in the morning, where what we saw, that okay, our markets opened more than 300 points down, and ultimately our markets closed more than 400 points down from yesterday. Obviously there was a big gap up, and then markets further slipped, and maybe because of expiry also things were playing out. So any trade where we're trying to chase the markets will not work. If you have seen uh, people who had purchased calls, who were buying calls for such a long time, markets never went up, and then out of frustration they started buying puts, and the day they purchased puts, market went up like anything. So they're scared of their uh, put positions in loss, and then maybe they might have again created long positions, and today what we have seen, market is again going down. So if we keep on chasing the markets, it is extremely difficult for anybody to make money in these markets. Agreed or not agreed? Please confirm yes or no. So what will work? Many times uh, regular option traders also started getting slightly you should say disheartened, that okay, whether something will work in these kind of markets, or whether this nothing will work in these kind of all quick analysis, and see that okay, can something really work? Now all the trades where you can wait and watch, what does I mean? It means that okay, if you have not taken any kind of a directional bet, that okay, in case market will go up, I need to do this, market will go down, I need to do this, those kind of trades where some quick action is required will definitely not work. One day it goes up as if there is no tomorrow, and another day it goes down as if there is no bottom, right? So very dicey markets, these kind of high swings uh, can give you huge amount of profits, but simultaneously these kind of high swings can give you huge amounts of losses. Chances of losses are always very high. So trades where you can wait and sit in the trade, and you're not required to do quick adjustments, those are the trades which will work in these kind of markets. Because if market was at 16,300 previous day, today it is at 15,800, next day it can again go to 16,300. So you have done an adjustment for market to go to 15,800 or lower levels, next day it goes to 16,200, and all those adjustments will go waste. So adjustments in such markets are uh, very difficult. So ultimately you have to create a trade where you can sit and you are not bothered about too much of adjustments. Trades where you are not at a risk of ruin. What is that risk of ruin? Risk of ruin means that okay, uh, you have sold a put and market has gone down. Yes or no? Have you experienced any trades where there is a lot of risk of, you have sold a call and market is going up only. You have purchased a call thinking that okay, since markets are now bullish, and market is going down, and in that case also it's a big risk, because if you have a decent quantity of calls purchased, all the money is going down the drain. So all the trades where you are at a risk of error is very difficult to control in these kind of markets, because it doesn't give you an opportunity. If you want to put a stop loss also, so from 16,300 at 330, to next day opening at 15,900, in between for these 400 points, there is hardly any stop loss possible. Only thing possible is some kind of hedging. Yes or no? Is any kind of a stop loss possible? Please let me know, so that you see I can also put that kind of a stop loss to my trades. Any kind of a stop loss, is it possible at the end of the day? It's not possible, right? So ultimately you have to switch to completely hedge strategies. Now when it comes to completely hedge strategies, now we need to see that okay, what is the kind of environment. So there are so many hedge strategies also. So whether each of these hedged option strategy can be used in every kind of environment? No. I will say, even I was professing that okay, in case VIX goes above 25, 30, I think it's better to stay away from the markets. But now all of us has experienced a VIX environment of 75, 80, 82 also in COVID days, right? So that time also we found that okay, definitely in a VIX of 80 also, in a VIX of 30 also, in a VIX of 40 also, there are some strategies which can be very smartly deployed, right? So now also VIX is very close to 22, 23, which is definitely a high VIX. So what kind of strategies can be deployed? Let us see. So what basic we are saying, what are the basic inputs with us to decide what kind of strategy we should use? Yes, first is VIX is high. Definitely VIX is high. That also means, which is a good opportunity as an option seller, not may not be as an option buyer. Premiums are also high in options. So all the hedge strategies which with negative to neutral vega will be good. So what do you mean by negative to neutral vega? So vega is basically a parameter which will tell you that okay, in case implied volatility or VIX from now onwards, if it goes up and your trade is having a negative vega, it will start giving you a loss. But if your trade is having a neutral vega, then you have in a way created a trade which is not at all afraid of whatever changes in VIX are happening. So VIX is also something which goes up, which is it's a mean reversion parameter. So it will go up, it will come back, it will go down, it will go up. So like that. So you cannot take those trades assuming that okay, VIX is 22. I cannot say that okay, let me take all the high VIX trades from 22. It will not go up, but from 22 it can go to 23, 24, 25. The way US markets move, VIX can also go up, right? So we need to take trades where VIX is slightly negative, may not be hugely negative, or more or less neutral. So based on these three inputs, we have seen that okay, what are the suitable strategies. So all the strategies which can be used in high VIX, most of you must be knowing. Can you name few strategies which can be used in high VIX? High VIX means you are getting a huge amount of premium, right? You're getting a huge amount of premium, and we are talking about selling strategies. So what are those selling strategies which you can use in high VIX environment? So obviously most common straddles and strangles, because you are getting a huge amount of premium. So you will love to sell a straddle or a strangle, so that in a high VIX environment, as soon as the VIX goes down, immediately you will start making profit. Next strategy can be butterflies and iron butterflies. Yes, even butterflies, iron butterflies are the strategies. Even if VIX goes to 40, it's a great strategy to be created, and condors and iron condors. Now here I have given you these three choices. You can make straddles and strangles, very similar strategies, butterflies or iron butterflies, condors and iron condors. But here I'll say VIX is high, but swings are very severe. Although VIX and swings are correlated, but many times we have seen that okay, VIX is high maybe because of a particular event. In that case, market may not be swinging like a pendulum, right? So in those cases, we can use different strategies. But here, we would like to create a strategy where my peace of mind is not lost. I need to create a strategy where my peace of mind. So even if market goes up by 400 points tomorrow and it goes down by 500 points next day, then I would like to keep a strategy that okay, market is moving like that, but I am not required to do something. I'll give you one example also of the strategy, only in case all of you click on the like button, right? So if I want that okay, I am not sweating with every 100, 200, 300, 400 points of market move, then definitely I will try to take a strategy which is risk defined. Straddles and strangles are not risk defined. They are open strategies, and they can give you unlimited loss. And if you're talking about short straddle and short strangle, it can give you limited profit but unlimited loss. So seeing this environment, we should not trade in straddles and strangles. Amateur trader will say, oh, I'm getting huge amount of premium, let me create some straddles. Ultimately, where will the market go? But that is the biggest fallacy. And if you fall into that trap, it can be really difficult to handle. Because what happens if you are into a straddle or a strangle and VIX keeps on increasing, market keeps on moving in one direction, it puts so much of margin pressure in your account that you are not able to manage your money well. Right, so better is we stick to butterflies and iron butterflies. If VIX goes further up, suppose from 22 it goes to 25 to 30, I will be very happy. I'll always keep some money with me, so that in case VIX is going up, I'll create more iron butterflies, and in case VIX is going down, all the butterflies, all the iron condors which I have created obviously will start giving me profits, right? So here, uh, I'll say avoid straddles and strangles, create butterflies and iron butterflies, create condors and iron condors. These are risk-defined strategies. You know, whatever happens to the market, I am pretty much safe. I am not going to lose anything, right? Lose anything, not I'm saying anything, but with adjustments, you can be always safely trading in these strategies. Let me give you one example of an iron butterfly, because again, we are entering into the last week of May series. So generally what we try to do, we do not keep any trades in the last week. We try to shift our trades or create new trades for the month, because last week can become much more volatile, right? So let me show you one of the possible butterflies. I'm not saying this is not a recommended trade, but just to give you an idea that okay, what kind of uh, peace of mind is there, plus what kind of profits can also be made depending on how market behaves. But first thing is, in this kind of a scenario, my first thing is that I should be very very defensive. I should not be aggressive in these kind of scenarios, because losing money is very easy in these markets. Making money will be very very difficult in these markets. So if I show you one example, this example is of June month and expiry. What I have done is I have created a 15,900 butterfly, which is almost the current level of the market, and I have purchased a protection at 400 points. So what has happened in this trade? If you see, max profit can be 16,878. We are not looking for that kind of a profit, but my max loss is 3,000 rupees. So even if I have created two, three, four, let us say even if I have created 10 such butterflies, my maximum risk is 3,000 into 10, 30,000 rupees. And obviously there are adjustments which will take care that okay, even if market is swinging wildly, I'm still okay with this kind of a trade, and I will recover those 30,000 also. And then what happens, this trade also gives me a chance that suppose okay, market swings, market goes to 15,500, market goes to 16,500, but ultimately after 15 days it comes back and rests at 16,000. That will be a golden opportunity for me to book profit. So these are the trades, either there can be a good profit, or I can just break even, but there will be no loss. So these kind of trades really help you to sail through swinging wild markets, and you are not always running behind any kind of adjustments. Yes, some adjustments are possible in this also, but that also, it is not that okay, you are not in the markets for a day or two and you have missed that adjustment, you have missed trading that day, and then hell is going to break loose. Nothing of that sort will happen. Your maximum loss is 3,000 rupees, and that loss also will happen at the end of the month, wherein in case you have not done anything and market has gone beyond the range of the butterfly. During the month, even if the market has gone beyond the profitable range of the butterfly, still there will not be a loss of 3,000 rupees. It always gives you an opportunity either to scare off the trade at a small loss, or to adjust as and when it suits you, as per your convenience. You can adjust, and still you can get out of the trade at a profit also whenever market make reversals, right? So this is just one example. There can be multiple examples. There can be examples in Banknifty also. there can be condors, there can be butterflies, there can be iron condors also. So I'm just to show you how these trades are, you can say, very stress free. You can create these kind of trades, and you can have different permutations and combinations, right? What Mr. Shah is saying, monthly strategies generally, and even in these volatile days, actually very calm to deal with. Definitely, monthly strategies are really, really more stress free, because in a weekly strategy, you hardly has a premium, right? Even if your premium is there, which is available at 300, 400 points, and market moves 400 points in a day, that makes it very difficult to handle that weekly trades. So definitely it is recommended that okay, you either do monthly trades, or maybe I don't mind doing July trades from next few days. So this is one of the examples. All of you who have not subscribed to our channel, please go ahead, subscribe to the channel. You will get hundreds of videos on option strategies, on option strategy adjustments. If you are into option trading and you have not seen all these videos, definitely you are missing something. So go ahead, subscribe to the channel so that you get a notification whenever we are doing a live video, or otherwise you can see all your other videos also. I'm giving you another thing. Now these are the two memberships. One is gold membership, which is having some exclusive videos on options, and then there's a diamond membership where a lot of adjustment concepts are resolved. Now you can join this by clicking on this join button. Now many of you have written to us, many of you have said that okay, whatever strategies you're talking about very complex options. So unless and until we know the basics, how will we understand all these complex adjustments and all these 4 lakh 3 lakh trading strategies? Is that a problem? Please write yes or no in the chat window. Do you think okay, maybe you need a refresher in basics of options, so that you see, once you are very clear in the basics of options, many of you do not need that, but many of our new subscribers, many of the people who are very new to options, definitely require that, right? Some of you do not require that, but all of you who require that, what we have done is we have made an arrangement wherein we will be sharing uh, all the basics of options uh, with all of you. For that, what you can do, if you need, if you do not need, no need to send this mail. If you need, you can send your email ID to us at info@theoptionschool.in. We are coming up with material which will be shared free of cost with all those people who need some help in brushing up their basic concepts, basic mechanism of options. So what you can do, you can send your mail requesting that okay, yes, I need this basic material. So we are coming up with something wherein you will get all this material available to you, or we will be sending this material to your Gmail drive also. So send your email ID only in case you need that material. If you are pretty much okay with that, then no need to use this option, right? And to contact us, you can contact us on any of these numbers. You can also follow us on Twitter at the rate the option school is our handle. Do not forget to like this video. Your likes are always very precious to us. Share this video to somebody whom you think it is useful. Do also write to us that okay, what kind of further topics you want us to cover. We have almost 450 plus videos wherein many trading strategies, adjustments, concepts are covered. But yes, we are also keen that okay, whatever additional value we can add to our subscribers, we would love to do that. So write it in the comment sections, whatever kind of content you would like to see. And if you have not subscribed to the channel, please go ahead and click on the subscribe button. Do not forget to click that bell notification also, so that you get a timely notification. Thanks to all of you for joining. Have a great day. Have a great profitable day tomorrow in markets. SGS Nifty is showing a good positive sign. So thanks to all of you for coming. Thank you. Good night.